Let's take it across to Abhay Agarwal, who is Managing Director of Piper Serica Advisors. He joins in right now with his thoughts on what the markets look like in 2026 maybe. And Abhay, forecasting may be a fool's errand, but well, we're in the business of hypothesizing and then seeing if the hypothesis turns out to be correct. And you could argue that after what has been, you could argue, tumultuous 2025, the stars are aligned in more ways than one for 2026 to be appearing a lot more respectable.
No, good morning, Niraj. I agree with you. I think 225 was, I would say, a year of consolidation across most of the capitalization classes, large cap, small cap, mid caps. We saw some corrections also. But you're right. I think the earnings have picked up. The macros are largely in favor. The valuations are more reasonable. FPI flows, which have been anemic throughout the year, hopefully will pick up. So I think I agree with you. I think 26, I'm quite hopeful, will be a much better year, back to mean reversal as far as long-term returns are concerned.
Okay, interesting. So Abhay, here's the question. When we spoke to 2 or 3 sell-side strategists / sales guys, and they said that their recent interactions / visits to the centers of FI activity seem to suggest that people are now willing to relook at India because of the 1 year of severe underperformance, what 27-29% dollar term underperformance, right? That they are willing to relook at India, or wanting to relook at India, not willing, but wanting to relook at India, selectively albeit, and the assessment seems to be that even if it doesn't lead to FI inflows in a meaningful way, it will probably lead to a pause in the incessant outflows that we've seen for a better part of 2025. Is that a trigger even if the trade deal were not to happen?
So let's start with the last point. I think a trade deal is very important, not only now from the perspective of getting a deal done, but also as a signal to the broader investor community that, look, India is serious about looking beyond political issues and entering into deals focused on getting the trade going. So I think from a signaling perspective, it's very important that we get a deal done. And I think once that is done, I have no doubts that will open up the FPI taps, because that is one of the biggest signals that people are waiting for. I think the pressure on rupee that we have seen will also ease off once this flows reverse. So without a trade deal done, yes, we would probably be slightly ahead of the consolidation zone that we have been in. But to really see the tap open up, we would need to have a trade deal in some form of fashion, whether even if it's a multi-step trade deal that evolves over 2 or 3 months, but starts somewhere. Because right now there is also this fear, Neeraj, that if a trade deal doesn't get done soon, will the US put further tariffs or penal tariffs on India? I don't think that's likely, but of course, till a deal is done, it's not done. So I'm waiting for some announcement, some positive announcement. There has been multiple stop and goes on the way. Announcements that trade deal is just around the corner, multiple visits by both parties, but nothing material has happened. So I'm hoping that at some point of time there will be some ink on the trade deal document, and then the FPI flows can resume in the normal manner that they have been.
Abhay, good morning. Hira on this side. So when you're looking at 2026, you're talking about your FPI flows. What are the special or specific indicators that you will be watching out for to confirm a sustainable return of foreign capital from here on?
So, Hiral, I think if you look at the data in 25 also, we have received a lot of foreign FPI flows. However, the selling has been higher. So I think on a net level, we see a $18 billion outflow. So what I would like to see is going into January, February, March, at least 2 months of positive flows. They may be small flows, but at least that establishes a reversal of the trend line where we have seen multiple months of constant selling. So I think the good news is that there is no fear in the FPI's mind, the foreign investors. When we talk to them, everybody wants to look at India. Nobody has abandoned India. They want to be in India. They're not even looking at timing the market or saying that, okay, this is a good time to get in. I think all they're looking for is some, there is a unanimous view that India is expensive. So this kind of correction, underperformance by the mid caps and small caps especially will help. Also, the rupee depreciation, while against the US dollar has been about 7.5%, against the euro, it's almost 20%. So just think of a European fund that has invested in India a year ago is already sitting on a 20% currency loss. But if you flip it around and say that, look, most of that loss is now behind me, and now the currency also is at a lucrative level. So if you take the rupee where it is and you look at the market, valuation broadly, I think it is a safe zone, a buying zone for the FPI. So, but still, I would like to see at least a month and a half of constant positive flows to establish a longer term trend line.
Hey, hi, very good morning. Tamanna here. The good thing is that we're speaking on a day when it makes sense to be positive on 2026 with the way markets are behaving. Of course, not that you're tracking everyday moves, but in your view, what do you think are going to be the winners in the new calendar year? Because some of the key themes have played out, right? Consumption boost has kind of played out. The tariff fears in that sense have receded. Where do you think that kind of opportunity lies?
Good morning, Tamanna. I think what we are seeing clearly is that this whole year and coming towards the end of the year, we have been engaging with companies in manufacturing space across the board. These are auto ancillaries, these are pharma companies, in other spaces also, electronics manufacturing, where they have really pushed the innovation agenda to build for the market. So I think these are the companies that are now primed for secular 20-30% annual growth with high margins over the next 3, 4, 5 years. And the good news is that they are coming from all manufacturing sector. None of these are services companies. So they are now competing head on with global competitors, very innovative products that have been developed with very large customers in Europe and US. And I think that gives us the confidence that these are the companies that have also seen some multiple correction, price correction at a very attractive 1.5 times PE growth range. So I think this is the space companies that have used the last year to complete their capex cycle. So they are at 40-50% capacity utilization. The ROCs will improve. I think manufacturing is where we are looking at, especially in auto ancillary, electronics, and pharmaceutical.
Okay. In terms of defense and railway, because I would say it is the season for budget stocks to start buzzing after Jan and Feb. Defense, railway, government spend, semicon play, rare earth play, is that something you start looking at a little more seriously early Jan?
We have already been invested in these spaces largely, but the caveat here, Tamanna, is you have seen that the order books of any company that is business to government kind of business, the order books are very lumpy. So you may go through 2 quarters of poor orders and then 1 quarter of one massive order, and then everything changes. So I think for investors who look at investing in these developing spaces, especially defense, railways, are fantastic spaces, with a 10-year runway easily. But the earnings will be lumpy. So as long as you are willing to look beyond just quarterly returns and quarterly announcements and look at them on an annual basis, I think you will be okay. But I think the problem is that investors want that linear growth quarter on quarter like in services business, and they don't get it here. So as long as investors are willing to look at beyond that and not worry about short-term announcements, price corrections, I think this is a space that you mentioned, all of them will make a lot of money. I think government is very cognizant of this, but then government has its own challenges of working through a bureaucratic structure. So there are challenges, but you can't have a better large customer than the government at the end of the day. So I think the willingness to engage with the private sector is there, and I think it will start reflecting in the numbers soon.
Abhay, what do you think? Okay, so slightly teda question I'm asking you, but what do you think is going to be one pivot from 2025 to 2026? One set of stocks or a sector which did very well this year, which is going to fizzle out next year?
Fizzle out, okay.
Okay, not do as well. Chalo, let me broaden it for you.
Yeah. No, I think one thing that we have seen is this kind of crazy demand for consumer internet stocks. And I think they are good stocks, good companies, but I think some of that aura or, that love of new stocks listing will kind of fizzle out. My guess is that while IPOs will be a very attractive space, will continue to be, but I think some of the recently listed stocks, the whole excessive valuation that people are paying for in the direct to consumer space, I think that will fizzle out. So I think that's where investors need to be a little cautious that a lot of forward return is already in the stock price. And we have seen this cycle earlier also. So I think that is one space that people have to be very cautious about.
Okay. Abhay, the big NBFC deal that happened, and you were constructive on this space, SFBs, NBFCs for a while now. This reinforces the appetite, but has the sweet part of the rally played out, or do you believe this is just starting off and we might have one more year of upsides for NBFCs? Parallelly, just squeeze in one more thing, right? Because Shriram, CV focused as well, a clutch of other CV focused NBFCs are giving some very good commentary, and we are hearing some very good notes around the CV upcycle as well. So maybe a word on that too.
Yeah, so I think let's start with the CV one. I think very clear data points suggesting a significant demand pickup. In fact, Niraj, not only CV, even in farm equipment in November, there was a complete stock out of tractors. There was no inventory. It got sold so fast and the manufacturers, OEMs were not ready. And that situation is now finally being corrected. So similarly in CV space, I think there is a lot more demand than the OEMs expected. The way we are playing that is through the ancillaries. And I think the ancillaries that are, about 20% EBITDA margin, high ROC, capex cycle done is a great way to play that CV cycle. On the NBFC question, Niraj, I think we are just at the very early stage of the NBFC and small and mid-cap banks rallying, because this kind of confidence money that is coming in across the board, as you mentioned, all the deals, plus the commentary that we are getting from the lenders. For the first time, I'm seeing the senior management of these NBFCs being positive. It's been 3 years that they have been first cautious, then cautiously optimistic, but now clearly optimistic. I think a lot of froth has been settled. The self-regulations that were brought in by industry associations have done a good job. There is a good credit demand. There is supply of capital for good lenders. So I think we are getting into a very sweet spot, purple patch almost for NBFCs. And I think this whole NBFC space, even unsecured lending space, which has been very unpopular, I think this will outperform the market in 26. This is our big bet now.
Abhay, a quick view when it comes to EMS as a sector as well, because you've been of the opinion that EMS as a sector is structurally strong. We've seen what's happened with the Keynes Technologies in the recent past, or a PG Electroplast. All of them have been actually drooling under pressure. What would you make of the EMS space for 2026?
No, I think the EMS companies will show very strong, earnings growth. I think they will have very positive management commentary. Valuations have run ahead of themselves. Even as investors, we would like the valuations to be more sensible. But it is a high growth sector, so I'm not surprised about the investor enthusiasm around it. There will be, par for the course, small and mid cap stocks do go through these sharp corrections in between. So investors will have to have the appetite. But we have full confidence that the whole EMS space in India is ripe for pretty significant growth over the next 5 years. And I think any sharp correction like this is, unless it is driven by very poor corporate governance, if it is just short-term pressure on the stocks, I think it's a buying opportunity rather than an opportunity to exit. But at the same time, I would say that the valuations are on the higher side, and we would like them to be lower. But then, as investors in the market, we have to take what is available to us.
Okay, so we have to take what is available to us. Abhay, any other themes that come to your forefront for 2026 which you're eyeing right now? Maybe it's still not ripe from an investment perspective, but something that investors should watch out for, which has not really worked well in 2025.
I think I would go back to the whole unsecured lending space. Over last 3 years, we have seen a very poor credit cycle. Some of the microfinance companies have really struggled, but survived. So I think any large NBFC that has lived through this tough year and has come out of it with growth, I think this is the space that people will take note of, because as the earnings pick up and the valuations look very attractive, I think this is the play. Frankly, the unsecured lending space is what we are quite bullish on now.
Thank you so much, Abhay. And season's greetings to you. Great to have you on. Abhay Agarwal there on his outlook for 2026. I think a few standout parts is that bullishness on financials, which you typically hear from everyone end of this year. This time, there's more than one reason for it. I mean, look at, for example, what Shriram Finance is doing this morning after the run-up that already took place on Friday. We'll hear from Shriram Finance and MUFG today at 12 noon, so keep an eye on that. That stock nearly 3.5% up.